All right. Today, I'm joined by Nathan, founder and CEO of Ondo Finance. Nathan, it's great to have you today. I just want to start us off today with you running through a little bit about yourself. Like, what started the idea of Ondo?
Yeah, definitely. Thanks for having me. So I guess in terms of my high level background, I come from TradFi, if you will. I started my career in private credit, private equity investing, but got into crypto pretty quickly after graduating college. So was very active trading throughout 2017, investing in ICOs, got excited by some really early DeFi at the time, things like DYDX. Ended up launching a crypto hedge fund, which I ran through much of 2018 and 2019. And then in mid 2019, I joined Goldman Sachs on the digital assets team. Was responsible for really anything crypto and blockchain related there, which meant a lot of work on the security token side early on. And then, come mid 2020, when crypto markets started picking up again, I got to be very focused on building out different components of a crypto prime brokerage desk, including helping institutions think about how to tap into the growing yields from the space, mostly indirectly through taking advantage of things like the premium on the BTC futures. But certainly all these yields are very correlated. Yet at the same time, I was participating in DeFi very actively on the side, managing a personal portfolio of liquidity pools on Uniswap, SushiSwap, all over the place, and looking for some way to hedge out some of the underlying risks from that portfolio, like from impermanent loss, and also speaking with a number of institutions looking for the same. And so ended up on this idea of creating effectively a risk marketplace where one set of investors can sell off the underlying risks from a pooled set of assets to another set of investors who take on that higher risk in exchange for a higher potential upside. So this looks like structured products that have different tranches. We call them a fixed and a variable tranche of the protocol today, with different levels of risk. And yeah, I left Goldman February of this year to build that out full time. We launched on mainnet Ethereum August of this year, with the initial vaults on Uniswap and SushiSwap, doing a couple of things, right? Certainly doing the risk transformation into the high and low risk exposures, and then importantly also unlocking the ability for investors to provide single-sided liquidity and tap into these dual-sided liquidity pools, to allow things like UMA providing only UMA tokens into a tranche on Ondo, and to get indirect exposure to the yields from an UMA ETH or an UMA Fey liquidity pool.
You started off at Goldman. You'd been trading crypto for a little while. What was your aha moment to leave that TradFi space and start Ondo? How did you start in the space specifically? What was that penny drop moment for you?
I think what got me most excited about founding something in this space was really watching and participating in the explosion of DeFi throughout 2020, and just seeing how inefficient the markets were. An obvious example for me that led to Ondo pretty concretely is the mismatch in single asset yields and the dual asset liquidity pools derived from those single assets. And Ondo tranches are effectively a way to capitalize on that mismatch. But yeah, there's just such a such unexplored green space of all sorts of traditional financial products that can be ported over into DeFi. Certainly structured products are a great example of that, but there's a lot more as well.
Yeah, we're seeing a lot more TradFi based narratives coming, and people and talent like yourself in ever increasing numbers, which is it's a great signal for our industry. You also mentioned Ondo solving a few problems in the space, and we're also seeing this narrative around DeFi 2.0 and liquidity as a service protocols popping up. Do you see Ondo solving a problem in that space, or is it something that's slightly unique and that sits adjacent to that space?
Yeah, I think we're definitely we're definitely solving liquidity management issues for DAOs, and thus part of DeFi 2.0 in that respect. I guess this evolution has been pretty gradual for us. Like, we did start off building these structured products for the purpose of servicing really like investors seeking risk-defined returns on their assets. And then over time, like, we found that DAOs themselves represent a perfect target audience for these tranches that we built, in part because they have motivations outside of simply the returns that they can get on their assets to deploy capital to these products, right? Specifically, DAOs want to increase the on-exchange liquidity, the assets locked in liquidity pools on Uniswap, SushiSwap, et cetera, in their native tokens. And they, generally speaking, don't have large amounts of ETH or dollars or, quote unquote, base assets to pair up against their own tokens. And so, historically, liquidity mining, pool 2 liquidity mining has been the dominant solution to this problem, whereby, a DAO can simply give out its own tokens to incent third parties to provide, these 50-50 portfolios of the DAO's token and a base asset into liquidity pools. And, instead, we provide a means for DAOs to simply invest their own tokens and have their investment be matched by third-party investments in, a corresponding tranche in Ondo in the form of, ETH or Fey or some other asset provided by the community. So it's similar in spirit to liquidity mining in that a DAO is able to, put up in some way its own token and get exposure, or drive liquidity to the dual asset liquidity pools. But, the big difference is that instead of a DAO giving away the tokens, spending them through liquidity mining, the DAO is actually investing them and, earning a yield on its tokens over time. And that's how we see liquidity as a service, or, more broadly, this idea of protocol owned or protocol controlled liquidity, a la DeFi 2.0, as being a more sustainable solution to pool 2 liquidity mining, which is, maybe good for bootstrapping a community. Like, certainly accomplishes some things that protocol on liquidity don't, right? Like, one of the purposes of pool 2 liquidity mining is to increase liquidity in an issuer's token, but another purpose is to simply distribute those tokens to community members. And liquidity as a service isn't really accomplishing that. But I think that there are better ways to distribute tokens in a way that's like, more aligned with the long-term visions of the protocol, even things like KPI option airdrops from UMA, than simply pool 2 liquidity mining. So I think a combination of things like KPI option airdrops and then liquidity as a service is a better way of achieving those two goals than liquidity mining.
Yeah, I couldn't agree more. We need way more smarter incentives in the DeFi space. It's been a journey that's happened over the course of 1 year, and where we've started to where we are now, I think has drastically changed, and gives a bullish signal overall on like DAOs having a lot longer term views on creating like sustainable products, and also a sustainable distribution mechanism, which you spoke about before. An important part, I think, that distribution mechanism that you spoke about, that matters to the average DeFi user is what does this mean for me? So for Ondo empowering DAOs to have better control over their liquidity, what does that ultimately like translate to for the average user in the DeFi space? So do you find yourself more like solving DAOs problems, which then ultimately translate to user problems, or does this actually accrue to a user in a quite a neat and succinct way?
Yeah, so for now, liquidity as a service is predominantly a DAO to DAO offering. So all of the vaults we've put up so far have been invested in by a participating DAO. So UMA as an example, and then by the Fey DAO on the other side. In the not too distant future, we're hoping to open up vaults where community members can also participate. We're just sorting out how to distribute the incentives for community members. Right now, the incentives from Fey in the form of tribe tokens are distributed directly to participating DAOs treasuries. And so we're looking at some other solutions like having community members actually stake on a rewarder contract, the variable tranche tokens in Ondo to get incentives directly. So once we sort out those logistics, we should open up vaults for community participation. Ondo as a protocol also has vaults outside of liquidity as a service that we put out on occasion that are fully open to community participation. These are vaults that we put up on top of already existing, already liquid liquidity pools. Most recently, those have been the highly incentivized liquidity pools on SushiSwap, the ones getting dual rewards, both from Sushi and from an issuer itself. So keep an eye out for those. But yeah, for liquidity as a service right now, like community members really just get the kind of indirect benefit of having more liquidity in their own token and thus, greater price stability, better ability to enter and exit with low price impact, stuff like that.
You spoke earlier as well, again, about Fey as a team. You've recently partnered with Fey, or kind of has been your one of your founding partnerships. How does the Fey partnership work? And how do you match like the two third parties to be able to create these pools? And are you looking at partnering with more strategic partners very similar to Fey?
Yeah, so the Fey partnership is a really unique one. I mean, Fey is kind of like a central bank in the space in that they can, increase the money supply, by their own control, and they could do that relatively safely at relatively large scale today, given how dramatically over collateralized the stablecoin is today. And so that presents an opportunity for Fey to, effectively act as an underwriter and, flexibly invest into the fixed tranches to match, more or less any amount of subscription requests from participating DAOs in the variable tranche. And Fey is also very mission aligned with us in wanting to provide services for DAOs like liquidity as a service. And so they're not approaching this purely from the perspective of how do they maximize their income or yield on the Fey stablecoin. They do receive a 5% APR on the fixed tranche, but they're also incentivizing the variable tranche participants with Tribe. They also have this desire to get increased utility in Fey, by establishing these new liquidity pools in Fey. So this is one way that they can accomplish that. In terms of partnering with other stablecoin issuers, we just we're partnering with both Frax and Reflexer right now. We just got approval from Frax governance for $50 million worth of Frax, and then FXS incentives, the Frax governance token on the variable tranche, sort of analogous to the Tribe incentives from Fey and the variable tranche. And yeah, hope to provide an option similar to liquidity as a service for token issuers kind of in or adjacent to the Frax ecosystem, including on Polygon, where Frax already exists and where we're deploying Ondo soon onto QuickSwap specifically. So we'll have an option for issuers who want to establish their first liquidity on Polygon through that partnership.
Uma was one of the first pools that got launched, which we're very proud about and really excited about what can come of this. Some other teams that have launched with you have been Grow, the Shapeshift team, Near, and MStable. What does this mean if I hold any of those tokens? And do you have any teams that are looking at coming into the second and maybe third cohorts that you want to talk about?
Yeah, so in terms of if you're like a community member owning any of those tokens, I guess I would just say keep an eye out for announcements of vaults where community members can participate. Hoping to have those available soon. Probably no other partners that we can publicly plug quite yet, but there's definitely a deep pipeline of participants coming soon to liquidity as a service.
We'll look quite forward to that, and keep an eye peeled out for that. And all right, so we were one of the first teams from Uma Protocol to kind of create one of these vaults. If you had to describe how you would like the partnership between Ondo and Uma to continue in the future, what does that look like between us? And how does that translate to more of the teams that want to be able to partner with Ondo?
Yeah, I mean, there's certainly a lot of ways you can work together even outside of liquidity as a service. I mean, we're exploring very deeply things like creating KPI options. I think as I touched on earlier, the idea of an issuer supplementing liquidity as a service, which helps them establish liquidity in their token, but doesn't necessarily help distribute that token to community members with something like KPI options, which does achieve that goal of token rights distribution and sort of incentive alignment with the community, is sort of a very natural thing that we can do. And then looking to continue rolling the liquidity as a service vaults. When the first one matures in about a month and a half, we'll look to spin up perpetual vaults after that, so that all of the liquidity is managed indefinitely, and you guys don't have to resubscribe every time one matures, and the community can come in and participate alongside the effectively the subscription window for any of these perpetual vaults, and then perhaps look to establish some UMA liquidity elsewhere, maybe on Polygon with Frax, or who knows where.
Nathan, it's been an amazing time having you here today. Your team has been on a whirlwind adventure since we first started having a conversation a few months ago to where we are today. And it's also been amazing to see how your protocol has grown and will actually continue to grow with some of the partnerships that you have lined up. If I want to keep in touch with you and your team, up to date on the news, or just engage with anything Ondo related, where can I find you and the team?
Yeah, for sure. Thank you again for having me. I mean, you can find us on Twitter at Ondo Finance, and then our Discord is linked from there. I think we have a easy link for that, discord.gg/Ondo Finance. It's probably the main hub of info for our community.